This is Asia Trade. I'm Shery in Tokyo.
I'm Avril in Singapore. The top stories this hour. Japanese stocks set to gain while the yen weakens after Takaichi is elected leader of the ruling Liberal Democratic Party. The supporter of easy fiscal and monetary policy now poised to become Japan's first female prime minister as the LDP bets on a swing to the right to win back voters. And President Trump pushing Israel and Hamas to seal a settlement to the war in Gaza with fresh talks set for Monday in Egypt.
Take a look at how we're setting up for the market opens, with Australia coming online early today with daylight savings now kicking in this week. We have seen the Aussie and the Kiwi dollar gaining ground last week against the U.S. dollar. This week we do have the RBNZ rate decision. A cut is expected there. We do have also Thailand and the Philippines central banks deciding on rates this week. Remember, China and South Korea are away on holidays, but the big one today, as Avril just mentioned, will be the Japanese market opens. We're seeing Nikkei futures pointing to the upside of more than 4%. So that pop expected after Takaichi won the LDP party election. We're expecting her to become prime minister during a parliamentary vote later this month. And you can see the Japanese yen continuing to weaken, already near that 150 level against the greenback. Of course, a lot of Takaichi's policies have been pro-fiscal, pro-monetary easing policies. So that's really weighing on the Japanese yen, especially given that those expectations of a rate hike as early as this month could be delayed. You can see the ASX 200 now gaining 0.4% and the offshore yuan holding at that 713 level as the Chinese markets are away on holidays, April.
And Shery, as we look at that pressure on the yen, what does this mean for the pressure we've been seeing recently on the greenback? Does some of that actually ease off? In the meantime, look at S&P 500 futures pointing to some upside. Remember, this has been an AI optimism-driven rally. Also rising Bitcoin, world's largest cryptocurrency, hitting those records past the 125,000 level, pulling back a little bit for the moment. But there's all this talk about dollar debasement and the risk rally, really supportive for cryptocurrencies. Aside from that, also green today is what we're seeing in Brent prices. This is against the backdrop of OPEC Plus agreeing to that November hike of 130 plus thousand barrels a day in supply coming in November. But this is a slower pace than what we've seen earlier in the year. So does this speak to the sense of caution among OPEC and its allies about oversupply? To some, this calls for a bottom in oil prices, even though Brent was at roughly the 4-month lows that we saw late Friday. For the moment, we are seeing that uptick. But as you said, the focus on Japan, Shery.
Yeah, Avril, let's actually get more on Takaichi, the pro-stimulus conservative, poised to become Japan's first female prime minister. Economics and government reporter Yoshiaki Nohara joining us now. Yoshi, great to have you with us. What does Takaichi's win mean for the Liberal Democratic Party, which of course had faced many challenges in the past year, including big election losses?
Right. So, so she won clearly. It was not a close, race, but it turned out to be, it was a clear win for her. And what was good for her was that she won the, support from a lot of regional, supporters within the LDP, while there was a split among lawmakers. So her challenge now is that how she is going to reunite all the party members and also parliament lawmakers, and that's going to be the key as she tries to also to get things done across the aisle with opposition parties.
What does this tell us about who she might potentially tap to go along with her in the LDP?
Well, it's a good question, but it's still early to see. But one thing to keep in mind is that the one of the groups that supported her win was the former Prime Minister Taro Aso's faction. And she is expected to appoint some names from that faction to lead for key positions within LDP.
One of her top challenges as she becomes prime minister will, of course, be the ongoing negotiations with the United States on that trade deal, which she implied could be renegotiated during her campaign. President Trump might be coming to Japan very soon. What are we expecting?
So, that's one area to keep in mind, trade, but also how the investment vehicle that two nations agreed can be launched to get it going. But at the same time, remember, there was another area of, the issue that President Trump may bring up if he comes to Japan, which is the defense spending. And Sanai Takaichi has said, she is supportive of more defense spending. So that's actually, good for if Trump decides to call for more defense spending from Japan.
Yoshi, thanks so much. Our economics and government reporter Yoshiaki Nohara there. Now, President Trump is pushing Israel and Hamas, meantime, to agree to a deal to end the war in Gaza, with mediated talks set to begin on Monday in Egypt. Hamas has agreed to release the last of the Israeli hostages, while signaling the rest of the U.S. peace plan is subject to negotiation.
The first piece of it, which was very clear from the letter and Hamas's response, is they have agreed to the president's hostage release framework. And what needs to happen now, and they acknowledge in the letter in their response, is there now needs to be meetings which are occurring even as I speak to you now, and hopefully will be finalized very quickly on the logistics of that. What that means is, who goes in to get them? Is it Red Cross? When do they show up, et cetera? What place are they going to be? And the conditions have to be created for that to happen. You can't have bombs going off and fighting going on in the middle of this exchange.
Let's get more with senior editor Wendy Benjaminson in Washington for us. So, Wendy, this is coming against the backdrop of Trump seemingly running out of patience with both Israel and Hamas. What do we know about his response to Hamas's statement so far, and what will this mean for the talks that are set to take place in Egypt?
Well, he is thrilled. I don't think is too strong a word, that Hamas has accepted at least the hostage release, prisoner exchange part of the deal. Remember, though, that they presented a 20-point plan, and so far Hamas has only agreed to that one part of it. Israeli Prime Minister Benjamin Netanyahu is much more skeptical that the rest of it will be agreed to. That's, though, what the talks are about. And apparently Donald Trump called Netanyahu over the weekend and said, "Come on, take the win. Let's be happy about this." But a lot, as Rubio continued to say in that interview, a lot needs to be done besides how to get the hostages and the prisoners exchanged, but then how to rebuild Gaza. Who will run it? The plan calls for a joint, Palestinian-Israeli group, of technocrats to sort of run the group, and Hamas doesn't want to give up power. A lot of other nations are pushing Hamas as well, Arab nations. So a lot just remains to be seen. All that's happened now is one part of it has been agreed to in principle.
Yeah, especially if Hamas says that the rest of the U.S. peace plan would not really be good for them. What does that mean on the timeline, given that really all sides seem to be losing patience at this time?
Well, originally, Donald Trump had given Hamas until 6 p.m. New York time today and Sunday to adhere to it. But he was very pleased with the first acceptance of the prisoner exchange, and he's given them a few more days. I think he wants to see how these talks are going to shake out. What it means if they can't come to an agreement is pretty dire. Trump has said, and Netanyahu has certainly shown, that in their words, all hell will break loose for Hamas and for the residents of Gaza if Hamas does not end up taking this plan. And remember, Trump has this unique negotiating strategy of putting out a plan and saying, take it or leave it, let's just work out the details. He doesn't say, okay, how do we get to peace? What do you say? What do you say? So it's right now, it's a pretty stark decision point for Hamas.
And this is a sort of negotiation tactic he's deployed in other conflict regions globally. We know how he's been pushing for this Nobel Peace Prize. Yes. Does this move the needle for him? Why is it so important for him?
Well, the Nobel Peace Prize is important to him because it is, the premier sort of accolade that you can get as a world leader. And of course, he's very interested in that. So he's been really hyping up all these regional conflicts that he says he has solved, even as people like Narendra Modi of India say, I kind of solved that one myself. Thank you very much. But so yes, if he can get a Mideast peace deal done before the Nobel Committee votes, I believe that's coming up on October 10th or somewhere around there, then, that would be very good for him.
Senior editor Wendy Benjaminson there joining us from Washington. Thank you so much for that. As we continue to follow the U.S. government shutdown, federal worker unions now asking a U.S. judge to block the Trump administration from carrying out mass firings during the government shutdown. They're seeking a temporary order to stop agencies from using the funding lapse as grounds for layoffs, known as reductions in force. The lawsuit says the Office of Management and Budget is illegally pushing agencies to use the shutdown as a springboard for job cuts.
This is a Schumer shutdown. Chuck Schumer instigated this at the behest of a bunch of far-left liberal interest groups. But there are Democrats who are reaching out to Republicans, having conversations about how we might be able to get the government opened up again. So hopefully the reasonable Democrats will prevail.
California Governor Gavin Newsom says he'll sue the Trump administration over its orders to send his state's National Guard troops to Portland. Newsom argues the deployment defies a federal court ruling that found no legal basis for using state troops. It's the latest flashpoint in the president's push to federalize law enforcement in Democratic-led states.
I wasn't served well by the people that pick judges, I can tell you. Things like that are just too bad. I appointed the judge and he goes like that. So I wasn't served well. Obviously, I don't know the judge. But if he made that kind of a decision, Portland is burning to the ground. You have agitators, insurrectionists. All you have to do is look at the television, turn on your television.
And as the U.S. government shutdown drags on, take a look at what that's meant for gold prices. It was tested a little bit last week, this rally in the precious metal, but it is advancing at the moment to a fresh record above the 3,900 level. Haven assets have been in demand. Gold itself has surged some 49% this year. So we're seeing that extension of a powerful rally that's been a feature of commodity markets all of this year. We'll have more ahead on the Asia trade. This is Bloomberg. Let's take a look at the week ahead. Central bank rate decisions in New Zealand, Thailand, the Philippines. Those will be in the spotlight with 2 cuts and a hold expected. Japan's wage growth, that's due in the middle of the week. That's expected to maintain upward pressure on inflation. What does this mean for the Bank of Japan against the backdrop of the LDP win by Sane Takaichi over the weekend? Chinese markets remain closed until Wednesday for the Golden Week holiday. Credit data due this week is expected to show slowing demand for a second straight month in the U.S. Investors watching for signs of a resolution to the government shutdown that's been delayed, of course. The release of some key official data, including jobs numbers. Now, let's bring in Shane Oliver, Chief Economist and Head of Investment Strategy at AMP for analysis on what to watch out for in the week ahead. Shane, maybe we can start off with what's happening out of the U.S. Key data points continue to be delayed, but we have some of these ISM numbers or private indications of what the U.S. economy is looking like. Past October, what is that going to mean for the Fed's rate path? What are you seeing in the economy right now?
Well, unfortunately, the news coming out of the US is pretty mixed. The jobs numbers remain on the soft side. We didn't get the payrolls, of course, on Friday. But if the shutdown ends soon, then, of course, it would only be a matter of days before we do get those payroll numbers. But when you look at all the other job indicators, including the services ISM on Friday, with respect to employment, they've all been quite soft. And so you've got this dichotomy between indications of a still strong economy more generally, consumers still spending, businesses investing, but on the other hand, employment looking quite weak. And the big unknown is whether the weak jobs market drags down the broader economy or whether the still strong economy drags up the jobs market. So a lot of uncertainty around that. And obviously the delay in the payroll numbers don't help on that front. But that obviously feeds into the Fed's decision later this month. We think they probably are on track for another cut, and the data hasn't been in contradiction to that. Obviously, a lot riding on what those payroll numbers show. And also, in a week or two's time, we get the inflation numbers out of the US, which will also feed into that, assuming those numbers actually get released.
When or if we do see that October cut, how is that supposed to feed into potentially the stock market? Because the September rate cut was supposed to fuel U.S. stocks, but if you look at the way they fared versus global peers, they actually barely budged. What are you seeing?
Well, I think the reason US shares didn't budge much after that September rate cut was that it had been largely factored in. I mean, the US share market is at around a record high, but it had largely factored in that easing, whereas other markets, I think, to some degree, are benefiting from signs of better than feared economic growth in the case of Europe. Maybe in the case of Japan, you get more fiscal stimulus under the new LDP leader, assuming she's confirmed as Prime Minister. So it's really just a game of all those markets are at record highs, but they take turns in making new highs. The US had sort of got to a point where it looked a bit extended, and it's gone for a bit of a consolidation, not a big one. But obviously, the next rate cut will also feed into that. I think that a risk for markets, though, is the money markets are factoring in something like 4 to 5 cuts out of the US over the next 18 months out of the Fed. So that's assuming a 0.25% cut each time. Whereas, the Fed's saying something a little bit less than that, another 2 this year and maybe 1 next year, and that's about it. So if the Fed is actually right now to deliver 3 more cuts and the market's expecting 4 or 5, that could prove to be a disappointment for the markets. But right here, right now, shares are still powering on. We have come through that seasonally weak period of the year in reasonably good shape. We're coming into a stronger period, although October can be quite volatile for share markets, and the shutdown could be a factor feeding into that.
Shane, to your point on Japan, is it safe to assume that we're going to see a big pop in Japanese equities for the time being, given the election results, or has a lot of it already been priced in? Because a lot of the candidates just wanted more spending anyways.
That's right. It seemed they were all pushing down that line. I guess the common narrative around the new LDP leader is that she's sort of a mix of Thatcher, free market economics, and Abenomics, which was easy monetary policy. And so maybe you get some variation of that, but it does seem as if we are on track possibly for more fiscal stimulus in Japan. Bit of uncertainty as to what that means for the BOJ. I think maybe it's possible the BOJ delays a hike this month and it comes later in the year. So money markets and the share market are maybe thinking, well, okay, we've got a new leader here. She's offering something which could be pro-market, positive for the Japanese share market, a bit more stimulus, maybe a delay in BOJ rate hikes, and overall that's a positive thing. And that's why, I think partly why, in anticipation of that, we started to see the Japanese share market push to record highs on Friday.
Does the delay potentially coming from the BOJ mean also a Japanese yen that will be weakening from here on out? Because we saw just last week that there were more bullish commentary around the spike in the yen that we saw given what's happening in the U.S. But at the same time, we have U.S. dollar weakness at this point. So how much of that is really taken off by the fact that we are also seeing losses on the greenback?
It's a bit confusing. I think the broader trend in the US dollar is down, and that will ultimately dominate, which will mean a stronger yen. But yes, at times like this, when you maybe see a change in leadership, more dovish monetary policy potentially, that can lead to a weakness in the yen. But ultimately, I think the broad trend for the yen will probably be up, and the trend for the US dollar will be down, because even if the BOJ delays rate hikes, it will just be a delay. It'll still come in December, I think, is the next meeting after October. They'll still get that. And ultimately, that means, particularly if you've got more fiscal stimulus, that probably means a stronger yen ultimately.
Shane, what do these trends in the greenback mean for the Aussie dollar for the rest of the year?
Well, the interesting thing to note about the Aussie dollar, there's all sorts of uncertainties out there, and share markets have been grappling with this. There is literally a wall of worry if you run through the lists of geopolitical and economic developments. But by the same token, if you look at history, whenever you see the Fed cutting rates by more than the Reserve Bank, in other words, that differential in short-term interest rates moving in favour of Australia against the US, that tends to be positive for the Aussie dollar and negative for the US dollar. And right now, the expectation in Australia on the money markets is that we get maybe one or maybe two more cuts, and a lot of uncertainty as to whether you get that at all. Whereas in the US, the money market's factoring in 4 or 5 more cuts. In other words, the Fed cutting a lot more than the RBA. Historically, that widening differential in favour of Australia is actually quite positive for the Aussie dollar. So I think the broad trend for the Aussie dollar is up. None of these things are going to go in a straight line. You're going to see lots of twists and turns there, but I think the trend in the Aussie dollar will remain up from here as you see more easing in the US relative to what the Reserve Bank does in Australia.
Shane Oliver, Chief Economist and Head of Investment Strategy at AMP. Good to have you with us as we're also watching the RBNZ rate decision, a cut expected later in the week. We're also watching French bonds. This on sovereign risks perhaps coming from the fact that French President Emmanuel Macron's decision to bring back a largely unchanged cabinet is now sparking an immediate backlash from opposition parties. The decision threatens Prime Minister Sébastien Lecornu's chances of surviving a crucial week in Parliament. Macron renamed most senior members of cabinet to their original posts, but named close ally Roland Lescure as finance minister.
Shery, take a look at how oil prices are trending. We did see that pop at the start of trade, and this is following on from Brent hovering at 4-month lows. Of course, we did hear over the weekend OPEC Plus agreeing to a modest production bump, and this is a signal that, they are looking to wrest back share of global oil markets, but they do seem to be a bit cautious on the oversupply issues that we are seeing globally. So that's something we'll be watching in the session as well. We'll have more ahead on the Asia trade. This is Bloomberg.
Take a look at how emerging markets assets are trading at the moment as we continue to watch the ongoing shutdown in the United States. A softer dollar really lending support to that rotation into EM assets. If these gains in EM currencies continue, we're going to see the biggest annual gain since 2017. Right now under a little bit of pressure at that 1843 level for MSCI EM index. But this, of course, as we continue to see the growth forecast for earnings around emerging markets, forecast to gain 28% through 2026. Taiwan and EMEA could be leading those gains. And of course, we do have China, South Korea away on holidays today, but do watch out for those central bank rate decisions in the Philippines and Thailand as well. We have more ahead on the Asia trade. This is Bloomberg.
Access to high-quality data is of utmost importance when making monetary policy decisions. However, it's also the case that we don't make monetary policy decisions every day. right? The FOMC meets to vote once every 6 weeks or so. Now, I think that's a bit longer than most shutdowns have historically lasted, so I'm hopeful that we'll get the data by the time we actually have to make the decision. I do see part of my job as bringing fresh and out of consensus ideas to what can be, at times a settled way of thinking. I have no trouble saying my view, even when it's wildly out of consensus, and speaking my mind. As long as I believe what I'm saying, I have no problem sort of speaking my mind. My dots for next year and the year after are not so dissimilar from the rest of the committee. All that's different is the fact that I want to get there a little bit faster.
Fed Governor Stephen Miran speaking to Bloomberg TV. Let's take a look at how that has played out on the dollar, which of course faced its worst week in about 2 months. And this is against the backdrop of that extended U.S. government shutdown. We are focusing as well on what this means for dollar yen, that relative greenback weakness as Japan braces for that shift to the right with the win over the weekend of the LDP Sanae Takaichi, and what this might mean for Japanese stocks and long-term government bond yields as well. They're expected overall to rise when markets open, as Sanae Takaichi is poised to become the next prime minister. Bloomberg M-Life strategist Mark Cranfield joins us now with more. So, Mark, maybe we can unpack what we're expecting on dollar yen first, that upward pressure. How much potential resistance, though, could this face? Or are you expecting an unimpeded march upwards?
It's pretty unlikely to be unimpeded. And if you look at the price action that we've seen on Monday, this is a classic. FX traders love these kind of situations. We have a classic knee-jerk jump where dollar yen gained significantly in early trading, and it's left behind a big price gap from where we were on Friday. So you'll get aggressive traders probably trying to send it back towards the 147 handle as the day progresses. We've still got if you think about where we've been over the past several weeks, the 150 line has been pretty tough for dollar yen to break above. It's not just about the dollar yen as well, because of the yen weakness as the crosses as well. So moves in euro, yen, sterling as well. They've all moved against the Japanese currency as well. So they'll need to retrace as well. There's an assumption that Takaichi is just going to be extremely expansionary. She'll want to stop the Bank of Japan from raising interest rates again. Those things were seen before, but her job is not going to be as easy as it sounds. She still needs to get a consensus of people to get her to become prime minister. That is not going to be an easy job, and she will need to negotiate her way into that. And investors will be expecting that there'll be some moderation in her views by the time the vote comes around for whether or not she's going to be the prime minister. Now, the Bank of Japan itself, she has said they should be independent in making policy, but you can imagine they'll be a little bit more cautious. Certainly, Governor Ueda, when he was speaking on Friday, was more cautious than was expected by the market. And maybe he was anticipating there will be a surprise result in the LDP race. So possibly October is no longer a certainty. We'll have to watch to see what the traders' odds are in the next couple of days. By the end of last week, we were expecting more than a 60% chance there will be a rate hike in October. Those numbers could well come down if people think the BOJ will be delayed. But they can't be delayed indefinitely. Inflation is very sticky in Japan. And the flip side, of course, is if the yen stays weak for too long, those inflationary consequences will get even deeper. So there's still a lot to play out here. The only thing that seems to be pretty clear is that Japanese stocks seem to love the idea that Takaichi has won.
Yeah, I mean, you see the upside in Nikkei futures up more than 5% at the moment. But either way, when it comes to the bond markets, whether the BOJ's rate hike is on the table or not, given the expansionary fiscal policies that we're expecting from Takaichi, what will be the market reaction in the bond space when she's already talked about more issuance already needed, perhaps, that could be unavoidable anyways?
Initially, you would expect it to be negative. When JGB futures open today, it wouldn't be surprising if they go lower. And you might initially get some steepening of the yield curve as well. We do have a 30-year auction tomorrow, which is going to be a lot more difficult now that Takaichi has won the LDP race. So in the very near term, you can expect it to be pretty tough for the Japanese bond market. But as things develop, if there's going to be a lot more spending, a lot more issuance of debt, it is more likely to be skewed towards the short end of the market. The Bank of Japan has already said that they want to reduce supply at the very long. It's been very difficult to sell super long bonds. There's been a bit of stability recently. The central bank will be very reluctant to give up that relative calm we've seen at the long end of the market. So new supply is likely to be skewed shorter. That will probably end up seeing a flattening of the Japanese curve. Even if that doesn't happen initially, that's the likely path in the months ahead. There's going to be plenty of turbulence and volatility across the Japanese bond market, and it'll be very much linked towards the main issues that Takaichi has to say early days. If she does get elected as prime minister, she'll need to put in a team around her, and people will be watching very closely to see where that spending grows and how much of an increase it is on the previous government. But flattening of the Japanese curve eventually is the likely outcome from a new prime minister.
Mark Cranfield, always good to get your insights. Bloomberg M Live strategist with what to expect of the Japanese markets as we head towards that market open in less than half an hour. But take a look at how cross assets are trading at the moment, especially with U.S. assets, given that, of course, we're also following treasuries gaining last week on the ongoing government shutdown there. Interesting that bond investors may be looking to invest in longer-term U.S. treasuries these days. We have seen this cluster of bullish option trades emerging over the past couple of weeks, betting that around rally in the 10-year U.S. Treasuries will drive the benchmark below 4% for the first time since April. You can see U.S. futures at the moment gaining 0.3% after we saw them a little bit mixed in the last session. Still, the S&P 500 held on to record highs, but we had a little bit of pressure on the NASDAQ 100, of course. Tons of interest in tech stocks has led to really high valuations and concerns that the market may be looking a little bit overheated. Goldman Sachs chairman and CEO David Solomon optimistic, though, about the U.S. economy. Speaking with us at Italian Tech Week, Solomon explained why he expects stronger growth next year despite a softer labor market and ongoing geopolitical turmoil.
The U.S. economy is in pretty good shape, and there are some very, very strong tailwinds that have really had a profound effect, and there are also some things going on that are creating headwinds and are probably leading the economy to, underperform its expectation at this time. But I'm optimistic that we're probably going to see an acceleration as we continue to head into 2026. The big structural issue that's kept the U.S. economy going so well is the U.S., and by the way, other developed economies around the world, are running very aggressive fiscal stimulus plays. Governments are spending enormously into economies in the developed world, and that keeps the economy going even when you have other headwinds. Second big macro phenomenon that's affecting the U.S. economy is all of the AI infrastructure build, all the capital spending, all that's going into the ground to support the deployment, the development, the continued growth of AI infrastructure into the enterprise, and that's a big tailwind too. That's balanced on the other side by the implementation of the trade policies, which are still getting absorbed. I think we're seeing, some of the effects from trade, but there's still more to go in terms of really understanding how the trade policy is fully implemented and how it balances growth. And then obviously the world's a little bit more geopolitically fragile, and that has an impact on growth and kind of confidence. But when you balance it all, and you saw the third quarter reading was quite strong, but year over year, from last December to this December, the overall growth trajectory will probably be a little bit less than 2%. And so that's slightly below trend, but still in pretty good shape.
And an acceleration into 2026?
I think that as the trade policies are absorbed and you have the continued stimulus and the continued kind of tech spend, you've got a pretty good tailwind. I hear as I talk to CEOs that would kind of have their finger on the pulse. Certainly the upper end of the economy is still spending quite strongly, a little bit more constraint on the downside, on the lower part of the economy. But I think the things you have to watch labor. There's no question labor is a little bit softer, and the Fed's watching labor carefully. And, I think you've also got to watch inflation and whether or not the impact of trade is just a one-time price movement or there's something, more significant that comes through, and it's too early to know.
Goldman Sachs Chairman and CEO David Solomon speaking with Bloomberg's Tom McKenzie. And we have more from the corporate front as well. NVIDIA partner Huawei has reported 11% growth in quarterly sales, signaling healthy demand for AI infrastructure. Revenue met analyst expectations, totaling around $68 billion in the third quarter. Huawei, also known as Foxconn, says it expects server revenue to more than double in the September quarter, while its consumer electronics business remains stagnant. Bloomberg has learned that Stellantis is planning to invest about $10 billion in the U.S. as part of a bid to refocus on this pivotal market. Sources say the car maker may announce around $5 billion in fresh investments in the coming weeks, on top of a similar amount announced earlier this year. The funding could be directed towards plants in states including Illinois and Michigan. And Tata Capital's $1.7 billion IPO has attracted anchor investors, including funds managed by Morgan Stanley, Goldman Sachs and Nomura, along with domestic mutual funds and insurers. The company allocated $523 million worth of shares to these investors ahead of a public subscription beginning later today. The listing is set to be India's largest so far this year, Shery.
Avril, a teardown of Huawei's flagship AI chips has revealed the use of components from major Asian tech firms, including TSMC, Samsung, and SK Hynix. The findings by research firm Tech Insights underscore China's continued dependence on foreign hardware, even as it pushes to expand domestic semiconductor production. For more on what this means for China's tech ambitions, let's bring in our China correspondent, Min Lo. Min, this also highlighting the fact that Huawei was able to get around U.S. restrictions.
Yes, it seems like Huawei was able to stockpile some of these components either ahead of U.S. rules tightening or perhaps through third-party intermediaries, because there has been a case of a Chinese chip designer, Sofgo, in the past buying TSMC dies and reselling to Huawei without disclosing it. There were 2.9 million dies that were sold to Huawei from TSMC through Sofgo. Of course, when that was discovered, TSMC did report that to the U.S. authorities, and U.S. then sanctioned the company. And according to this latest teardown by Tech Insights, it found that there are components from TSMC when it comes to those dies for the accelerator, and there are HBM, high bandwidth memory components from SK Hynix as well as Samsung. But granted, these are older generation technologies. TSMC has said that the chip in question is no longer in production. But it shows you, right, that Huawei is still heavily reliant on these foreign components, even as it pushes out its latest chips, which it already had struggled to get out the door in 2025 because of those chip restrictions from the U.S.
Mimi, when it comes to the broader U.S.-China relationship, China is also now calling for the removal of national security curbs on Chinese deals in the U.S. What more do we know about this?
Yes, this is according to what sources have been telling Bloomberg, and China is reportedly dangling this $1 trillion investment pact to the U.S., and it's clearly trying to seek a similar treatment to other countries like South Korea or Japan and the EU. Three of those countries each have pledged around between 350 to 600 billion yuan in investment in the U.S., and China is seeking a similar deal. And in order to achieve that, they will need the U.S. to roll back some of these national security curbs or screening of Chinese investments. And China is reportedly also seeking for lowering of tariffs on imported inputs for Chinese factories that are built in the U.S. And here you can see on this chart that Chinese investments into the U.S. is dwindling to just a fraction of what it was back in 2016. And if Trump approves this, it would be a huge reversal of U.S. policy so far, because it was just a few years ago when the U.S. established that Congressional Committee to screen U.S. investments, Chinese investments, that committee known as CFIUS, which has in the past year blocked quite a number of Chinese deals in the U.S. And this is, of course, something that will likely be discussed when President Xi and Trump meet at the sidelines of the South Korea APEC summit.
Min, thank you so much. Bloomberg's China correspondent Min Lo for us. We'll have more heads on the Asia trade. This is Bloomberg.
Take a look at how Japanese markets are looking ahead of the open in less than 15 minutes. Of course, we have seen the election of Sanae Takaichi, who's seen as pro-stimulus for the LDP leadership election. She's expected to become the first female prime minister during a parliamentary vote later in the month. And what we'll be watching are JGBs very closely because, of course, we have seen the 10-year yield close to 2008 highs, and long-term JGB yields could potentially rise given her views when it comes to fiscal spending and, of course, not wanting the Bank of Japan to hike too quickly. We'll be watching some domestic-oriented stocks, small caps as well, that could do well. Banks, although, could be pressured given what I just said about the BOJ and JGB trajectory as well. Goldman now seeing higher long-end JGB yields after Takaichi's win as well. Let's bring in Christopher LaFleur, chairman at AmCham Japan, who, of course, has his own views about this election. Chris, always great to have you with us. Give us your reaction first to Takaichi's win here, because you've had a few conversations with her over the past couple of years already.
Certainly. Well, over the years, and particularly when she served as the Minister for Economic Security in the Japanese government, we've maintained a very good dialogue with her on the issues. I recall personally attending a meeting at which she delivered an excellent speech in fluent English, I might add, to our group to reassure us the Japanese government was fully cognizant of our concerns with regard to recently enacted Japanese economic security legislation. So, as I say, we have a good dialogue with her over the years, and we certainly congratulate her on becoming the Liberal Democratic Party's first female leader. And as you've indicated, we'll see what the Diet decides later this month. But of course, there's high expectation that she will eventually become the next Prime Minister of Japan.
Her fluent English, as you mentioned, could also come in handy if she does, in fact, get to meet President Trump later in the month. She has talked about potentially renegotiating the trade deal if needed. What do you make of that?
Well, I think that was a reference to a comment she made in one of the debates that was held for the LDP presidential candidates. But I think she was carefully caveating that. And I expect that she and her government will continue to try to implement faithfully the agreement between the two governments, because I'm quite confident that she wants to maintain the best possible relationship with the United States. You'll recall that she was a very strong supporter and indeed served in the cabinet of former Prime Minister Abe, who is also well known for having a strong relationship with President Trump. So I expect that she will start off by having just as strong a relationship going forward.
What about the relationship with other regional trading partners? We know what her stance towards China might look like. Are you expecting any developments towards South Korea or even to China against this backdrop?
My sense was that she took great care during the party presidential campaign to avoid creating any additional tension in Japan's relations with its East Asian neighbors. And I would anticipate that as Prime Minister, particularly given her other priorities, that will continue to be her posture.
What are you hearing among businesses about the potential for addressing some of the challenges that they are already facing, including cost pressures or labor issues? We know what she said previously about immigration as well.
Right. The expectation, of course, is that she's going to pursue a more expansionary fiscal policy. And I think for business in general in Japan, that's going to be a positive. You've already seen in the Tonkan a few days ago that Japanese business confidence is picking up now that the U.S.-Japan tariffs deal has been concluded. And I think her ascension to the leadership will further encourage business to invest, even as she considers ways that the government can be more supportive.
What are some of the supportive government measures that your business members would like to see from this new administration?
Well, we're very much focused on general business conditions in Japan, of course, and naturally we would like to see our markets here expand further. As they do that, we also want to continue encouraging the Japanese government to continue its structural reform efforts. And in this area also, I think it's important to recall that the new LDP president was very much a supporter of former Prime Minister Abe's Abenomics program, which included, very importantly, encouraging further structural reforms in Japan. Along those lines, we'd certainly want to encourage the Japanese government to ensure that its coming economic security measures continue to take the importance of foreign company participation and a level playing field as a key element. We certainly would like to see improved policies encouraging innovation and stable supply in the pharmaceuticals area. And we certainly also hope that as the Japanese economy further picks up, there'll be an even greater market for aerospace products from U.S. manufacturers.
Christopher, thank you so much for your insights. Great to hear from you on what her policies might entail and what the business community wants to see. Christopher LaFleur is chairman at AmCham Japan. Cash Japan ahead every Monday at 8:40 a.m. If you're watching in Tokyo, subscribers can watch live on the terminal using the TV Go function. This is Bloomberg.
We're headed towards the market opens in Japan, and we'll be watching those banks very closely as they could be following Sanae Takaichi's win as LDP leader. We could see some pressure. Investors anticipating her pro-stimulus stance will have an impact on bond yields and monetary policy. In fact, the 2-year yield currently falling ahead of the market opens. And expectations that long-term yields will rise, though. We are seeing more concerns over increasing bond supplies. Opposition parties have already been calling for tax cuts. And, of course, expectations being reduced of a BOJ rate hike this month. And given Sanae Takaichi's position when it comes to the BOJ, you can see that already pressuring the Japanese yen very close to that 150 level against the greenback. The market opens in Tokyo is next. This is Bloomberg. This is Asia Trade. We're counting down to Asia's major market opens. We do have Japan and South Korea away on holidays, but we're watching central bank decisions this week in New Zealand, the Philippines, and Thailand as well. But Avril, it's really all about Japan today. Of course, the market reaction to Sanae Takaichi's win in the LDP election. She's seen as a pro-stimulus figure. So we are now seeing those expectations of the BOJ rate hike being delayed and the pressure on the Japanese yen.
Yeah, and we are seeing that pick up, interestingly, on JGBs as well. Most seem to think that consensus going forward is for curve flattening. Of course, aside from her pro-stimulus policies, it's also how she's going to engage with the likes of the U.S. and Donald Trump specifically, Shery.
Yeah, especially given that we could see President Trump's visit to Japan later in the month. And of course, as she's also mentioned, renegotiating perhaps parts of that trade agreement with Washington. And you said it, we continue to watch the JGB space because we were expecting short-term yields to fall and long-term yields perhaps to rise given the views from Takaichi around fiscal spending, reducing expectations of a BOJ rate hike this month as well. The 10-year yield now rising. Of course, we were already at around the highest level since 2008. The Japanese yen now close to that 150 level against the U.S. dollar as well. That initial slump for the yen, could it continue, is a big question. But really huge upside when it comes to Japanese stocks, with the Nikkei and the Topics gaining more than 1.5% at the moment. And this, of course, as we are really watching those domestically oriented stocks, those small caps that could get a boost on growth expectations. Banks, though, in focus because they could really be pressured on Takaichi's pro-easy fiscal monetary policy as well. Let's bring in Rie Nishihara, in fact, the Chief Japan Equity Strategist at JPMorgan Securities, who could give us her take on what we're seeing in the markets right now. Great to have you on this day as we're seeing the market reaction already. Could this initial pop in Japanese stocks continue?
Yes, that's a issue for the all of the market. It was a big surprise for much of the public, including the market participant, that LDP will elect Takaichi-san as a LDP president. So I think that initial reaction for Takaichi policies will be positive. The Nikkei's in the future is now reaching 48 or higher, but the sustainability, as you question, is an issue. I think that could relate with the medium-term path of the fiscal policy. Ms. Takaichi stated in her campaign pledge to the election that expansionary, proactive fiscal spending, but with responsibility. And also, she said, in long-term reduction of the government debt to GDP ratio. So in this campaign pledge, market had an impression that her policy stance is a bit closer to centrist. But in her inaugural speech, she was more dovish. She spent a lot of the time for, saying that short-term physical expansion, such as income tax deduction, raising the income tax deduction, or the cut of the gasoline and diesel, cut of the gasoline and diesel tax, or the more spending for the local government for, rate hike in wage hike in SME, local SME.
So the boost that we're seeing right now, and the expectations perhaps that those pro-growth policies will really power small caps, really power some of those domestically oriented stocks, that all depends on how expansionary Takaichi is.
Yes.
So the indications right now is that she was more dovish than expected then?
Right. Compared to the campaign pledge before the election, I think many of the market participants took her stance as less dovish than the dovishness in her.
What will be the most consequential of some of the policies that she's already mentioned?
Consequence.
Most consequential for the rally to continue?
Yes, so more dovishness in her physical policy stance and more dovishness in monetary policy stance. Yes.
Rie, are you expecting more upside for the smaller caps versus the Japanese banks, given what we're expecting on the BOJ and the rate hike that might be pushed further delayed?
Yes, in a short term, in Ms. Takaichi's inauguration speech, she said that the government has a responsibility of the policy formulation of economic policy, which includes monetary policy. And then Bank of Japan is an entity to choose the best means to attain that. So, and also she said that current inflation above 2% is more cost push inflation, not demand pull inflation, which she wants to wait for. So overall, market find her inauguration speech is more dovish in monetary policy. So which means, at least in the short term, if her policy stands to continue like that, that could be a headwind for bank stock. Yeah, and for SMEs, yes.
We are seeing the Nikkei rising 3% following Takaichi's LDP win. I wanted your thoughts. You alluded to some of this earlier about the sustainability of this rally. For the medium-term outlook to carry on, how important is fiscal consolidation, you think?
Yes, in March and in May this year, as Shery mentioned, and also if you look back at some cases of the long-term rate spike in history, like in 1998 or 2003 VAR shock, equity market continued to rally regardless of the bond market decline. So history tells us that there is still some, more way to go for the, equity markets to go up. But the credit rating of the Japan is lower, clearly, than in the past, compared with the past. So I think this time the medium-term path for the fiscal consolidation is a bit more important. So we expect that new premier, first female premier, to get the best balance between short-term expansion and medium-term fiscal soundness. And Takaichi-san also said in her pledge and also in her inauguration speech that in the medium term she wants to address this, physical consolidation.
Until we get to the medium term, right? Because when you look at politicians, what they want right now, especially at a time when households are feeling poor, is to continue to help drive growth, right? At least when it comes to defense spending and defense stocks, is it just way up from here, given Takaichi's more hardline stance when it comes to defense spending as well?
Yes, she said that she is going to revise that national securities documents, which was set in a couple of years ago, so which opened the path for increase of the defense spending in a relatively short-term perspective. We haven't seen yet that official Japanese government stance yet under Mr. Takaichi's cabinet. Cabinet will start in a week or so. So we'll wait for how the things will evolve in that spaces.
That could play well into President Trump's agenda here in Asia, right? We are expecting him to come this month, perhaps meet with Ms. Takaichi as well. The fact that she talked about renegotiating the trade deal, could that be a risk for the markets?
Ms. Takaichi clearly denied she will not revise the promise of the trade negotiation, especially in investment parts like 550 billion fund from Japan to U.S. Right. So she said they were. Her cabinet, if it started to have a more communication with the U.S. administration to choose or to suggest the projects or issues to be investment.
We'll be looking forward to how that cabinet comes up with this new prime minister and the vote that will secure her place, of course, as head of Japan in around mid-October is the expectation. Rie Nishihara here, Chief Japan Equity Strategist at JPMorgan Securities. As we continue to follow the big market moves in the Japanese session today, we're talking about the broader Nikkei now gaining about 3%, highest on record. But this is one sector that's under pressure, and perhaps not that surprising, financials, given, of course, the expectations that the BOJ rate hike this month could be delayed, given the stance coming from Sanae Takaichi, who is really pro-stimulus, pro-easy monetary and fiscal policies, although we're seeing the long end debt yields continuing to rise already to 2008 levels for the 10-year yields, given, of course, her very expansionary fiscal policy as well, Avril.
Take a look at U.S. yield, Shery, as we see that upward pressure. Looking at 4.13 at the moment on the U.S. 10-year. But, of course, among the market moves that we've been tracking in the session today, also what we're seeing in Brent after OPEC Plus's modest supply increase for the month of November. We are seeing that proving some relief for Brent prices, which last week were hovering near those 4-month lows. Also seeing upside, generally positive on the Australian stocks. But Bitcoin is the other one that we've been tracking, given we are in the month of what some have termed October. That's been driven also by this dollar debasement narrative. And note that in the month of October, we have been seeing Bitcoin rally in 9 out of the past 10. So that's something that we're tracking as well. We'll have more ahead on the Asia trade. This is Bloomberg.
President Trump is pushing Israel and Hamas to agree to a deal to end the war in Gaza, with mediated talks set to begin on Monday in Egypt. Hamas has agreed to release the last of the Israeli hostages, while signaling the rest of the U.S. peace plan is subject to negotiation.
The first piece of it, which was very clear from the letter and Hamas's response, is they have agreed to the president's hostage release framework. And what needs to happen now, and they acknowledge in the letter and their response, is there now needs to be meetings which are occurring even as I speak to you now, and hopefully will be finalized very quickly on the logistics of that. What that means is, who goes in to get them? Is it Red Cross? When do they show up, et cetera? What place are they going to be? And the conditions have to be created for that to happen. You can't have bombs going off and fighting going on in the middle of this exchange.
Let's get more with Bloomberg's government editor, John Herskovich. John, so how close are we to a deal, and what will you be watching in order to gauge if we get there?
Sure. There's optimism here that we haven't seen before. A lot of people are saying that we're as close as we've been to some sort of deal, but there are enormous details, huge hurdles to clear. The first thing is the exchange of the hostages. The Hamas, the Palestinian Gaza authorities, are looking for Israel to do a release of prisoners that are being held there. Trump has also called for Israel to stop its bombing campaign. So this is the first part, and all of this is going to be difficult. These are confidence-building measures. If they take place, we see the arrangements being made, the details being worked out. We'll have some progress being made, and this could help move the process forward.
John, talk to us about some of the key provisions in this peace plan and what are some of the more contentious points?
Sure. What we're seeing with this 20-point peace plan is that it calls for Hamas to give up its weapons, for it to disarm, and also we're also calls for Israel to gradually withdraw from Gaza. The plan envisions having a temporary stabilization force, a temporary government, and a peace monitoring facility. But the thing is, there are a lot of difficulties in this. How far Israel will withdraw, whether it will be a full ceasefire, whether Hamas will relinquish power, what say it will have in the government. Israel doesn't want it. The security guarantees that will be given to the authority that's in Gaza. It's a very difficult process. And the first stage is this hostage deal, release of the hostages in exchange for the prisoners. So the talks begin this week. They're mediated talks. Top U.S. envoys are there. We'll have Israel and Hamas, and we'll see how it goes with these confidence-building measures.
How much at stake is there for President Trump himself? We know that he really wants a Nobel Peace Prize.
Yeah, I think the Peace Prize comes at the end of this week, so I'm sure he's seeing that deadline. I mean, Trump has put a lot into this. This is something that he's put pressure on Hamas, he's put pressure on Israel to reach some sort of settlement. The international community has been pressing Israel on so many fronts. It's faced isolation. There's pressure on Netanyahu to get something done, pressure on Hamas to get something done, but there are political forces domestically in both countries. The right wing in Israel is probably not going to doesn't like some of the provisions of this deal. Hamas doesn't want to see its power gradually reduced and eliminated as part of the provision. So there's a lot at stake, and Trump is pushing to get this done as quickly as possible, looking at what may be coming out of Scandinavia later this week.
John, we will be watching out for what we see on that Nobel Peace Prize potentially. Thanks so much for walking us through the latest developments on Gaza. Government editor John Herskovich for us. Let's take a look at how oil prices are faring. Of course, over the weekend we saw OPEC Plus committing to that moderate supply increase, certainly that was lower than some of the estimates or predictions in the markets. So seen as a cautious move by OPEC Plus. Plus potentially, and this relief rally you're seeing in Brent prices, will it last given the lack of demand overall we're seeing in global markets? Let's bring in Bloomberg oil reporter Wei Lun Sun for us. So Wei Lun, put things in perspective for us, what we saw from OPEC Plus over the weekend.
Thank you, Avril. So what we saw is today we see Brent trading at above $65. It is about 1% higher than we saw last week. And they are really reacting to what the group, as you said, right, to resume production of about 137,000 barrels in November. It's the second promised phase of increase in production. The first one was for this month. And that's part of the wider package of 1.66 million barrels per day that the group has already paused for a while now. And so today we see this increase in prices despite, as you said, an expected oversupply in the oil market. And they are really reacting to this broader range of options that was floated around last week, where we heard up to 500,000 barrels that could be returned to the market. And today's number is way smaller than that, and that's really helped some traders to gain more confidence in the prices.
What does this also tell us about OPEC Plus's commitment to try and wrest back its share of the global energy markets?
It is, right? Because Saudi Arabia is really the big brother in this group, together with Russia. What we have with Saudi Arabia is they're one of the better funded oil producers among their grouping. They are trying to wrestle back some of those market share, not only against U.S. shale producers. The U.S. has been a big producer that's outside of OPEC. You also have what they call cheats within the OPEC who have been secretly trying to increase production. So what we see now, Saudi Arabia is trying to push for increased supply so that it can wrestle some of that market share back. And you have the other producers within the grouping facing like lack of investments in their infrastructure. Some like Russia is actually trying to contend with like increased attacks on its oil production capacity. So that's all pulling back some of that potential production. We do see some estimates for that 137,000 barrels per day that OPEC promised over the weekend. Actually, Russia takes up about a third of that. And a third of that might come under stress because of Ukraine's attacks on oil export facilities. And therefore, Saudi Arabia is really one of the only major supplier that could wrestle back some of that market share in a broader scheme of things.
Wei Lun, what are we seeing on the demand side, especially when it comes to oil flows through Asia?
Right. So we have some estimates from the International Energy Agency that's based in Paris that oil inventories by the first quarter of next year could reach up to 4 million barrels per day. And that's a huge overhang for the market itself. Up till now, the market has been trying to look for signs of this supply glut, as we call it, over the past few months. But prices have remained pretty stable, horizontal, sticky, and a lot of it can be attributed to China's stockpiling of oil prices, of oil barrels. And so, but now we are starting to see signs of the glut emerging. We do hear of analysis that China's stockpiling might have reached its peak. We see oil floating on water, as according to a few commodities research firms, those numbers have reached one of the peaks in recent years. So there's a gradual concern that this oversupply is really going to hit us pretty soon. And therefore, with China's expected slowdown, India still trying to wrestle for different barrels, shift its supply chains due to U.S. pressure on its Russian purchases. No one really knows how big of this oversupply is going to be, but it's all on the table, right? We know that it's going to come, and how soon. It seems like it's going to be here pretty soon. Yeah.
Bloomberg's oil and shipping reporter Wei Lun soon there with the latest on the oil prices right now. Take a look at how Japanese assets are trading at the moment, because even those oil and energy related stocks are gaining ground in this huge upside that we're seeing on the Nikkei, gaining almost 4% right there at the highest on record. Every sector in the green right now, with the Japanese yen continuing to weaken against the greenback towards that 150 level. And all of this after the election of Sanae Takaichi to the LDP president. And of course, she's expected to become the next prime minister, the first female prime minister of Japan later this month in a parliamentary vote. But with really the probability of the Bank of Japan's rate hike in October moving lower, we continue to see the pressure on those short-term yields, especially with the 2-year yield now at around below 90 basis points. The 10-year yield also holding steady at that 166 level against this, of course, as we had seen that 2008 year high already leading up to the vote. But the expectation right now, Avril, is for more fiscal stimulus and for the potential that the BOJ rate hike might get delayed given Takaichi's stance on monetary and fiscal policy.
Yeah, and as you alluded to, that seems to be the concern for the banking-related stocks, because they are experiencing this Monday their worst day versus the topic since April. And of course, this is a sector that has overall been doing well this year. In fact, outperforming some of the other sectors given the expectations of BOJ normalization. And as you see these bets of a BOJ rate hike for the month of October receding, that seems to be affecting the view on the bank's profitability. Although there are also some that say that given how Takaichi moderated her position during the election to align with broader LDP support, they actually believe that the sector remains fundamentally healthy over the longer term. Something we'll be watching in the session. We'll have more ahead on the Asia trade. This is Bloomberg. Here are some of the top global headlines we're following. Federal worker unions are asking a U.S. judge to block the Trump administration from carrying out mass firings during the government shutdown. They're seeking a temporary order to stop agencies from using the funding lapse as grounds for layoffs, known as reductions in force. The lawsuit says the Office of Management and Budget is illegally pushing agencies to use the shutdowns as a springboard for job cuts. California Governor Gavin Newsom says he'll sue the Trump administration over its order to send his state's National Guard troops to Portland. Newsom argues the deployment defies a federal court ruling that found no legal basis for using state troops, is the latest flashpoint in the president's push to federalize law enforcement in Democratic-led states.
I wasn't served well by the people that pick judges, I can tell you. Things like that are... It's just too bad. I appointed the judge, and he goes like that. So I wasn't served well. Obviously, I don't know the judge. But if he made that kind of a decision, Portland is burning to the ground. You have agitators, insurrectionists. All you have to do is look at the television, turn on your television.
French President Emmanuel Macron's decision to bring back a largely unchanged cabinet is sparking an immediate backlash from opposition parties. The decision threatens Prime Minister Sébastien Lecornu's chances of surviving a crucial week in Parliament. Macron renamed most senior members of cabinet to their original posts, but named close ally Roland Lescure as finance minister. Shery.
And with those concerns, we are now seeing French bond futures falling, traders weighing the risk of that government collapse when it comes to France. And we are seeing the euro losing ground against the U.S. dollar by 0.25%. But when it comes to the euro against the Japanese yen, a rally, in fact, when it comes to the yen, is now weakening to the record low against the euro after Sanae Takaichi's victory in the LDP election here in Japan. And of course, broad Japanese yen weakness near 150 against the greenback. We have more ahead. This is Bloomberg.
If we face something against national interest, I believe it's important to clearly express our position within the framework of the Japan and US agreement. At this point, I have no intention of overturning any agreement made so far.
Huge upside when it comes to Japanese stock markets, with the Nikkei now at the highest on record and gaining more than 3.5%, while the Japanese yen now is weakening towards 150 against the US dollar. In fact, the yen weakening to a record low against the euro after Sanae Takaichi's victory. Of course, the expectation is for more fiscal and monetary policy easing, and that also leading to short-term yields falling here in Japan, with the 2-year yield now around 90 basis points. As a 10-year yield holds steady, of course, we have already risen towards the highest level since 2008 on expectations of more fiscal expansion. Japan stocks reporter Alice French joining us here in the Tokyo studio, along with our senior FX and rates reporter Ruth Carson. But Alice, let me start with you, because of course we were really wondering what was going to happen with the Japanese equity markets and different sectors that could get a boost from Takaichi's win. But is this sustainable?
I mean, that's the question, right? Today we're definitely seeing a lot of positive sentiment, particularly in things like defense and tech, those kind of strategic areas that Takaichi has talked about putting investment into. We're seeing some defense shares up over 16%, chip makers up, also things like real estate, retail. But as you say, the momentum and how long it can be carried on for will really depend on how much she can show the market that she's not going to upset things too much, right? Is she going to end up putting pressure on the BOJ? How well will she cooperate with those opposition parties? We know the LDP is obviously in a minority. So I think that's really what investors will be looking as we move through this week and the rest of this month.
Ruth, so there are some of these swirling concerns, as Alice has just highlighted. But for the moment, what are we seeing in the reaction in yen trading? What does this tell us of how traders have perceived this election win from Sanae Takaichi?
Well, if we look at markets today, right this instant, the most popular macro trade when it comes to FX is to sell the yen. And it's not just a dollar-yen story, it's also a euro-yen story, which we know is at, near a record high. But if you look at the WCRS function on the terminal, the yen has weakened against virtually everything, every Asian currency, every G10 currency out there. So certainly it's about going right. We know now who the LDP leader is. We know that she is pro, potentially monetary easing. So it's very much about taking off those rate hike backs by the BOJ, a weaker yen.
How sustainable are these moves with the Japanese yen and also in the JGB space? Because we are seeing those short-term yields being pressured right now.
Absolutely. And if we look at the yen, for instance, the moves are large. Pardon me, it is outsized compared to other FX pairs out there, and it shows very much a knee-jerk reaction here as well. So some traders are indeed potentially looking at this time to potentially add yen longs. However, it's hard to fight the tide right this instant, which is short the yen.
Alice, we are seeing the outlier today really being these Japanese banks. To your point earlier about whether some of the momentum we're seeing in markets today carries on, what do you think the emerging trend on Japanese banking stocks is going to be?
It's a good question, and it's something that investors all over the world will definitely be watching, as Shery pointed out, in terms of how sustainable this rally can be. We know that banking stocks have carried a lot of Japan equities rally so far on expectations of those rate hikes and more income from higher interest rates. You know, if Takaichi does end up resulting in a more sort of cautious BOJ, and if we don't see that rate hike this month, then potentially investors might sort of start thinking that she could be putting pressure on the BOJ, and that could be negative. There could be a slowdown, or even in extreme cases, an end to those rate hikes. That would obviously be bad news for banking stocks. Having said that, I think in general there is a sense that Takaichi is not going to do anything too crazy. Even during her campaign this time, she really sort of dialed down that rhetoric. So I think, today there's a knee-jerk lower, but we'll see kind of in the following weeks and months how that really plays out in terms of BOJ policy and financial stocks.
What have been the long-term expectations of Japanese equities? Because for the longest time, we've been talking about corporate reform leading to the long-term boost. But at the same time, with Takaichi having sort of implied renegotiating the trade deal with Washington, that could be added risk on top of everything else that we've talked about.
100%. I mean, especially as we know that Trump is going to be in town in just a few weeks' time, right? So the stakes are definitely high. And I have been hearing some worries, especially amongst kind of foreign investors, that, if she does kind of upset the apple cart, if she does kind kind of re-escalate those trade tensions with Washington, that would obviously be negative for sentiment. Having said that, she has said that she wants to move forward with implementing the trade deal kind of as smoothly as possible. And if she is able to do that, and if she does also move forward with these strategic investments, we could actually see more cooperation between the US and Japan on things like chips, shipbuilding, defense, and of course that would be positive. We know that equities have obviously already rallied to all-time highs, and so the stakes are high to keep that momentum going. But I think overall people are feeling generally positive moving forward, but with some kind of nerves under the surface as Takaichi kind of finds her feet in this administration.
Ruth, we're seeing and hearing the term knee-jerk reaction a lot today. As we see pretty sharp moves in the yen versus these other crosses, what is your sense of to what extent or at what point does this become an issue for Japanese authorities who don't necessarily, as we know, like all this volatility?
Absolutely. And I think key to your question is knee-jerk. So if we see completely outsized moves here, 150 plus, yeah, I'm sure we will probably be hearing from the authorities. They wouldn't be liking that at all. But I mean, look, 150, it is a level that we've seen in recent months. So in the sense that, is this, for example, August of last year? I doubt it. But certainly keep watch the comments that might be coming through. But for now, it is an expected reaction to see knee-jerk reaction, so to speak.
When it comes to the JGB space, Ruth, what are we expecting, given, of course, the expectations of where the Bank of Japan could go this month or later next year?
Absolutely. And again, it is very much a rate story, as we all know. The yen, in many aspects, is just a mechanism of what's happening. If we look at futures, we're seeing that JGB futures are bid. In other words, people are going, is the Bank of Japan really going to be raising rates now as quickly as we think? So again, if you talk about knee-jerk reaction on the other side, we're seeing bonds getting a bit of a bid. Again, remember that Japan is very much an anchor to rates around the world as well. So any outsized moves, particularly on the cash side, could influence everything from treasuries to bonds and gilts as well. So definitely closely watch the space.
Alice, you've run us through some of the sectors that investors look quite positive on. I wonder, are you hearing anything else on some of the AI bets? Given how, of course, we're going to be watching very closely the US and Japan trading relationship, potentially Takaichi's relationship with Trump, how are things shaping up?
So I think certainly, at least in the immediate term, Takaichi's win is going to be a positive, at least for sentiment around Japanese tech shares. She's spoken about, economic security, wanting Japan to kind of regain its glory in certain key sectors, which of course does include chips and AI. So there will be expectations of kind of an injection of government spending, which of course is going to be good news. Also, even before Takaichi's win, there was a lot of optimism around Japanese tech shares because we know that there are lots of companies that make kind of very key, quite niche components needed for AI. Last week, we saw some collaborations between Japanese companies and these AI giants. We know that OpenAI, of course, already has this big collaboration with SoftBank. We saw Hitachi also opening a collaboration with OpenAI, and we've also got, Fujitsu is also, of course, teaming up with NVIDIA. All of those are going to be tailwinds for the tech sector moving forwards, and I think having more domestic support in the form of government spending is only going to drive things higher. Of course, there's always the risk of things getting overheated or becoming a bit bubbly, but I think at least in the short term, this is going to carry those shares forward even further than they already have come.
For now, investors just focusing on the positives. Japan stocks reporter Alice French and senior FX and rates reporter Ruth Carson for us. Great to have you both. Now let's also check in on what we're seeing in bonds across the region. Of course, in Japanese 10-year, you're seeing that pressure building up, and it seems to be at 167 thereabouts on the yield on the Japanese 10-year. Of course, seeing that pick up, it seems, on Australia 10 years. Amid the pressure we've seen upwards on US, the benchmark as well towards that 414 level. In the meantime, the Fed Governor, Stephen Miran, says he expects to see disinflation in the services sector. This is driven by housing costs due to stricter immigration policies under Trump. Miran also gave us his outlook on inflation and the Fed's policy path on interest rates.
My view is that policy should be forward-looking, right? I don't necessarily have a forecast that those items are going to continue rising. In fact, I think that a lot of them will actually reverse somewhat. But for my process, what matters most of all is the cost of housing, because that is the single largest component of the inflation process. And it's also one of the things that people notice the most. They notice when their rent surges. They notice when the cost of shelter increases. And that's why it gets the largest weight in the inflation indices. And my expectation is that we've just experienced, the biggest population shocks to both the upside and the downside in my lifetime, and I think in most people's lifetimes. And to me, it would be very surprising if that left no lingering trace on the price of shelter. And so I am expecting a significant disinflation to the services component of the inflation indices driven by shelter, which is affected to an extent by changes in population growth.
Well, we were talking before we came on about your view of R-star, the neutral rate. We've got inflation running at basically 3%. You've got unemployment at 4.3%, which is historically very low. The Atlanta Fed says we're growing 3.8% or grew 3.8% in the third quarter. There's no economic model that I know of that would get you to a near zero neutral rate with those kind of conditions.
Yeah, so first of all, I have seen some folks argue that they think that my conception of the neutral rate is zero. That's not the case. I think that's a misreading of the speech. If you read the speech carefully, you'll notice that I do a weighted average of a model-implied ex-ante and a market-implied ex-ante rate, and it gets to about a half. And that's consistent with the dot that I put down on the statement, on the summary of economic projections. And so I basically thought, sort of going into things last year, there were all these policies that were pushing R-star higher, like the highest population growth we'd seen in decades, the largest sustainable fiscal deficits we'd seen, sustained fiscal deficits we'd seen in a really long time. Those are pushing R-star higher. So last year I really thought it was at the top of the range of where everyone else in the committee thought it was, and I think it's now come down this year to the bottom end of the range of where everyone else thinks it is.
But you can't model that.
What do you mean I can't model
it? The models, if you put in the numbers that we have right now, it wouldn't spit out near zero or 0.5%.
Oh, real rate. Well, no, but what I've done is modeled my expectations for inflation based on the changes that I see happening from housing, as we talked about a moment ago. I've modeled out changes to the output gap that I expect to see from policies that expand the supply side of the economy and therefore expand potential output faster than they would expand actual output. And some policies that we've seen enacted over the course of this year would push out potential and actual by the same amount or bring in potential and actual by the same amount. Other policies would push out one more than the other. And so for an example of one that would push out one more than the other would be deregulation, right? I think that the regulatory state has been being peeled back over the course of this year, and all indications are that will accelerate, particularly as the pace of confirmations of appointees has just picked up as well. That, in my mind, will accelerate the pace of deregulation, too. And when you remove regulations, you expand the potential output of the economy faster than actual output. And so that creates a positive output gap.
Fed Governor Stephen Miran speaking with Bloomberg's Mike McKee there. We had more ahead on the Asia trade. This is Bloomberg. Broad upside across markets here in Japan. Of course, China and South Korea away on holidays, and a big day in Japan as we react to Sanae Takaichi's LDP win. She's expected to become the first female prime minister here in Japan. Every sector on the Nikkei in the green right now, but of course we'll continue to watch banks because that could be under pressure as we're seeing short-term yields under pressure here, given the expectations that the Bank of Japan may have to delay rate hikes that were expected as soon as this month. And we're seeing the Japanese yen also holding losses because of those expectations and very close to that 150 level against the US dollar, Avril.
Yeah, Shery, and another market that won't be away on holiday today is India's, and two big Indian IPOs set to start taking orders from the public this week. The offers from Tata Capital and LG Electronics Indian arm, they're set to test investor appetite in what's been one of the world's busiest listing venues this year. Equity capital markets reporter Giulia Ferretti joins us now. So, Giulia, talk to us about what's been driving this IPO boom.
So it's mainly driven by the domestic investor base in India. Retail investors have been putting money into their mutual funds, and those are then flowing through into the stock market. And so that's really sort of helped buoy, obviously, valuations as well as the demand for new stock offerings. And this is something that started last year. In fact, last year was a very strong year for Indian IPOs with about $21 billion raised. And this year is coming up to be either close to that or maybe even more. There has been about $11 billion raised so far this year. Obviously, this month we're going to see another $5 billion added to that tally, and there are many more companies in the pipeline. So the domestic investor base has really been driving the demand for this, and that's come even as foreigners have been selling Indian stocks, actually, because of concerns about growth, tariff tensions with the US, as well as the high valuations that we saw in the Indian market, and there's been a rotation into China. And still, the domestic demand is enough, though, to keep absorbing the supply that is coming as these Indian companies look to go public.
So are we expecting then this IPO trend to continue?
Very much so, yes, obviously barring any black swan events. But given the inflows, the monthly inflows from the retail investors, there is certainly the expectation that this boom of IPOs will continue. There's a really big supply coming from companies such as PhonePe and obviously further down the line, Reliance Jio. So as long as these, even as the foreigners have been selling, there is still no expectation for bankers that this will slow down. In fact, valuations might come down a little bit, but still issuers will just have to adjust that to the market.
And do we have any indication of what are some of the deals we can expect?
There's a really long list of deals, some of them that we're expecting this year. Obviously, in addition to Tata Capital and LG Electronics, we're expecting Meesho, PhonePe, FinTech, Pine Labs, and the list really goes on. And then the real sort of cherry on top would be Reliance Jio, although that's likely to come next year instead. That will still be India's largest IPO on record at around $6 to $7 billion.
Equity Capital Markets reporter Julia Fioretti, great to have you with us. And we have some other corporate stories that we're tracking at the moment. Bloomberg has learned that Stellantis is planning to invest about $10 billion in the U.S. as part of a bid to refocus on this pivotal market. Sources say the car maker may announce around $5 billion in fresh investments in the coming weeks, on top of a similar amount announced earlier this year. The funding could be directed toward plants in states including Illinois and Michigan. NVIDIA partner Hon Hai has reported 11% growth in quarterly sales, signaling healthy demand for AI infrastructure. Revenue met analyst expectations, totaling around $68 billion in the third quarter. Hon Hai, also known as Foxconn, says it expects server revenue to more than double in the September quarter, while its consumer electronics business remains stagnant. A teardown of Huawei's flagship AI chips has revealed the use of components from major Asian tech firms, including TSMC, Samsung, and SK Hynix. The findings by research firm Tech Insights underscore China's continued dependence on foreign hardware, even as it pushes to expand domestic production. For more on what this means, let's bring in our China correspondent, Minmin Lo. Minmin, so this also highlighting that Huawei has been able to get around U.S. export restrictions.
That's right. And when Huawei had first introduced this 901C chips that went into mass production earlier this year, it was really touted as a major breakthrough for Chinese chips manufacturers, right? Especially SMIC, which is the manufacturer for Huawei. But it turns out in this teardown by Tech Insights that it contains dies from TSMC as well as high bandwidth memory components from SK Hynix and Samsung. Now, these are older generation technologies, with TSMC saying that those dies are no longer in production, but it shows you that Huawei has somehow been able to stockpile a huge amount of these components, either ahead of U.S. rules tightening or perhaps through third-party intermediaries. And there has been in the past cases where companies like Chinese chip designers buying TSMC chips and reselling to Huawei without disclosing them, and Huawei had got its hands on 2.9 million of these TSMC dies in this way before that company SoftGo was discovered, and the U.S. then sanctioned that company. But yes, it shows you that a lot of Huawei's technology now is still dependent on foreign hardware.
Min, what's next for Huawei then, especially if and when the stockpile runs out?
Yeah, that's the big question that many Chinese companies are trying to address, right? Because Huawei, according to our sources, is looking to double the production of that 901C chips. And again, when that news was out, it really, brought a lot of optimism around the achievements that Chinese chip makers have made so far. But now there is the question of, is Huawei going to continue relying on foreign components? Because according to some analysts, some of Huawei's stockpiles, especially when it comes to the HBM components, that could run out by the end of this year. Does that mean then that the local chip makers, the likes of Changxin Memory Technologies, that's a Chinese chip maker that has been making some progress on HBM, does it mean that they do have the ability to catch up close to the level of technologies that these foreign components have? So this is certainly something to keep watching, especially next year when Huawei is reportedly looking to step up its production for these chips.
Min, thank you. Bloomberg's China correspondent Min Lo for us. We have more ahead on the Asia trade. This is Bloomberg. Let's continue tracking what we're seeing in Japanese assets against the backdrop of Sane Takaichi's expectation that we're going to see more issuance of bonds. That supply issue really playing out on the long end. You're seeing the 40-year yield rising 14 basis points thereabouts to 3.52%. And of course, as some of our analysts have been highlighting, the medium-term outlook really is going to depend on whether we see fiscal consolidation, which does look a bit unlikely at the moment, and this receding bets on the BOJ's rate hike for later this month. That's really playing out in the Japanese lenders, which are certainly underperforming today. I think it's their worst day against the topics in a long, long while. 2% down for the moment. The Nikkei continues going from strength to strength. You're seeing hit that record high and going way past that as well. 47, almost 700 you're seeing there. And almost 1,900 point move on the Japanese benchmark as we continue to track how markets are perceiving the election win over the weekend for the LDP of Sane Takaichi. That's it from the Asia trade. Our markets coverage continues as we look ahead to the start of trade in Hong Kong. The China show is next. This is Bloomberg.